Hey, this is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I'm here to bring you my June 2022 San Diego market update. So let's get into it. Everything is about inflation right now. Inflation is all you're hearing. Inflation is driving the stock market crazy, the crypto market crazy, and now it's starting to affect the housing market. But it may not be affecting it the way you think it is. So let's get into the details. The San Diego median home price is now sitting at $875,000. One thing to note, this is the same value it was at last month. And the month prior to that, in March, it was sitting at $850,000. And prior to that, in February, it was sitting at $800,000. So clearly, the appreciation rates that we've seen at the beginning of the year is starting to slow, and we've hit kind of a plateau. Obviously, interest rates have risen drastically, and that's what's causing this slowdown in demand, and therefore a slowdown in the appreciation of homes. But we still are dealing with supply issues. Now, that being said, this slowdown in demand has been drastic and has been significant. But what I would love to tell folks right now, I believe this is an opportunity, and an opportunity that may only be here for a couple months if you're thinking about buying a home. And the reason I'm saying that is right now we're all in a turmoil of what's going on, what's happening. All of these quick changes have been hitting us rapidly over the last couple months. The interest rates have spiked drastically in the last couple months, where now we're sitting in the high fives to the low sixes if you're in a conventional space, low fives if you're in a VA space, and pretty much everybody's looking at, hey, what can I do to try to get a lower rate? So the biggest impact that inflation is having on the housing market is it's affecting the mortgage interest rates. And mortgage interest rates have been on the rise pretty much all year. But specifically between March and June of this year, they've risen substantially. Back in March, we saw most loans somewhere in the realm of 3 to 4% range. And now most loans are in the realm of 5 to 6% range, so that's a substantial increase in a very short period of time. So obviously, that is now starting to have an effect on demand. As a matter of fact, April was the first month where we saw most loans closing with an interest rate of higher than 5%. And that continued in the month of May, which is the month that I'm getting my data from, and it has now continued into June as well. So as a result of that, we've seen a substantial slowdown in the buyer demand. Obviously, when you have such a quick and drastic increase in interest rates, people that got qualified for their loan back in February or March, the monthly payment that they were, provided or estimated has changed drastically. Because remember, every time the interest rate goes up by 1%, that typically costs you somewhere in the realm of 10 to 12% more on your monthly payment. So that has caused a lot of buyers to drop out of the market and therefore has reduced demand. And as a result, if you follow the median home sales price, back in February, it was $800,000 for San Diego County. Back in March, it was $850,000 for San Diego County. And then in April and May, we've been pretty much exactly at $875,000. So you've seen the appreciation that we started the year out with has now started to level off. And actually right now, what I'm seeing is we're starting to see more price reductions on the market, even though it's only maybe about 10% of the homes that are experiencing price reductions. But price is becoming more and more important now as buyers are reaching a limit of what they can potentially afford. So there is some downward pressure on prices at this time, and that's causing us to pretty much plateau with respect to appreciation at this point in time. So now let's look at the supply side of the equation. New inventory is down 15% year over year. The days on market have pretty much been consistent at 18 to 17 days for the last few months. So that's been steady. But one thing that is starting to increase right now is the months of inventory on the market. And the reason for that is because buyers are being a little bit more selective about the homes that they choose to go after. And so back in February, months of inventory was right at a half a month of inventory. Then in March, it went up to 0.6 months. In April, it hit 0.8 months. And right now, we're sitting at 1.1 months of inventory. So it's nice to see that the months of inventory have increased, but we're still in a very low state of supply. 1.1 months of inventory is still very low. For San Diego to get to kind of more of a normalized San Diego market, we want to see that number get up above two months, and more likely should be around 3 months or so worth of inventory. So we have a ways to go there. So what I would love to share with you, if you're thinking about buying a home, right now you may have a unique opportunity as we're going through all this turmoil and churn as people are adjusting to the new normal with respect to mortgage interest rates, that I am seeing some buying opportunities where people can get the homes for less than a listed price. People are reducing their price reduction because they aren't selling in a week. So if you're capable to buy right now, and you could potentially take advantage of one of those opportunities, now may be a great time for you to look at doing so. Most economists are still predicting us to finish out the year with somewhere around 10 to 11% of appreciation in the housing market. And then next year to probably finish out the year with around maybe 4 to 5% of appreciation in the housing market. So the moral of the story is, because of the supply shortages, we are not expecting a housing market crash, but we are expecting a slowdown and maybe even a plateau. And we may even see a momentary dip to come back up. And if you see that, and to be honest, I'm seeing that a little bit right now as we speak, it's a good opportunity for you to take advantage of. Now, if you're thinking about selling a home, the moral of the story for you is presentation and pricing is essential. And having someone that's knowledgeable about the market, understands the market, can see which way the market is moving in your immediate neighborhood, has an eye for what the buyers are looking for in homes, that's the person that you need marketing your home and helping you to sell your home, because that's the person that's going to help you put the most amount of money in your pocket when you do so. If you're thinking about buying or selling, I would love to have a more detailed conversation with you about your specific needs and your specific goals and see what I could do to be of assistance. And this is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I hope you enjoyed my video. And if you don't mind, please subscribe, like, etc., so I can help build this channel and get more folks to watch these videos and take in my real estate knowledge and real estate information that I'm providing to you. Thank you for watching. Take care.